Hey guys, it's me, Tashana, and I get so many questions from people who are tired of renting and want to become a homeowner. They're just not sure where to start or how it all works. Well, today I'm going to share with you 19 steps to home ownership. Now, these are the steps of a typical home loan process when you go through a bank or a mortgage lender. So, first thing first, hire a realtor. Most of the time, realtors don't charge buyers in the home buying process. We make our monies on the back end when the sale closes, and the commission is usually paid by the seller. So don't be afraid to hire an agent. There are way too many steps in the process of buying a house, and it's one of the biggest investments that you'll make in your lifetime. So why go it alone when you can have a knowledgeable agent by your side every step of the way? So, first thing, prequalification. This normally determines the maximum amount you are eligible to borrow. It's not a guarantee of the loan. The key to getting pre-qualified is to provide your entire credit history. Neglecting to mention outside loans can nullify the process. Now, pre-approval is similar to pre-qualification, except your debt, income, and credit are all verified and you're actually approved for the loan up to a specific amount and under certain terms and conditions. So becoming pre-approved means you can search for your dream home knowing exactly how much you can afford. Now, here comes the fun part, the hunt. You know how much you can afford and you can begin shopping. So you ask your real estate agent to search daily for homes that meet your specific criteria and send them to you. I'll take care of that for you if you leave me. So, when you find the right home, the terms of the sale are negotiated, including the sale price, repairs, request, move-in date, all that stuff. Your agent will present your offer to the seller with your pre-qualified or pre-approval letter, and it will usually be submitted with the offer, and it can tilt the scale in your favor, especially in a competitive market. Once your seller accepts the offer, you will need to obtain your mortgage. Unless you have been pre-approved, you will need to complete the loan application process to obtain a loan estimate. Once you have received the loan estimate and are comfortable with the terms and the fees, you will notify your lender of your intent to proceed with obtaining a loan. Paperwork supporting the application must be submitted. This normally includes pay stubs, 2 years tax return, account statements, verifying sources of down payment, funds to close, the reserves, additional income, all of that good stuff. If pre-approved, this step has already been done for you. Now, the appraisal is required by lenders and on all home sales. That could jeopardize the sale if a discrepancy exists between the appraisal price and the actual value of the home. So when they do a title search, they search for any liens against the property conducted. A lien may have been placed on a property to ensure payment of outstanding debt by the owner. All liens must be cleared before the title can transfer. Now, with the property inspection, most purchase loans require an inspection for termite or water damage and possible safety hazards that, and some repairs may need to be done before the sale can occur as well. Now, with the processor's review, a loan processor will package all pertinent information to be sent to the underwriter, including any explanations that may be needed, such as reasons for derogatory credit. Now, the underwriter is the big determiner on this. They make the final decision as to whether or not the loan is approved based on the information received. So the lenders are looking for borrowers who make timely payments. Emphasis, make timely payments. Stop paying your bills late. Now, the mortgage lenders may require borrowers to carry a private mortgage insurance if their down payment is less than 20% of the sales price, which most buyers tend to be. Now, the final loan approval, in most cases, when your credit and debt to income ratio are good and your loan will be approved. In some cases, you may need more money to put down. There may also be conditions to meet before the final approval. Now, after you do all that, you need insurance. Lenders require fire and hazard, sometimes flood insurance, to replace the value of the structure. Then you're going to be signing all your paperwork. The final loan and escrow documents are signed by the buyer and the seller. So we're almost there. Then they're going to be doing funding. They're going to wire a check to the loan company. And it's from the loan company, sent to the title company. Then It's the closing. All documents are signed and transferred. The titles are recorded with the parish or the county that you reside in. Then the title company can now authorize the escrow company or closing agent to draft a check to the seller. They got to pay them. And then, congratulations! Now you are a homeowner. Get the keys, baby. But on a serious tip, if you need anyone to help you with any of your real estate needs, my name's Tashana. I'd be happy to help you. Take care now. Bye-bye then.